Hello, welcome to CMC Markets on Thursday the 18th of July, and a quick look back at the events of this week, and we'll also have a very quick preview of the key data items to look out for next week. Joining me this week is my colleague from the Senior Client Traders Desk, Nick Dale-Lace, and hopefully he'll be able to give us an insight into the mindset of our clients, given the fact that we have had a number of key events take place this week. Obviously, we're going to cover events in Europe and the political instability there. The change of tone from the Bank of England, Mark Carney, and obviously Mr. Bernanke's testimony to Congress and to the Senate, and his views on the likelihood of a tapering program into the end of this year. So, Nick, let's start with euro-dollar. As you can see on the screen behind me here, we have got client sentiment, not only of euro-dollar, but also the smaller segments, or the little pies that we can see there, is the S&P 500 and the US 30. Now, we're hitting record highs again on the Dow, probably going to hit record highs again on the S&P, and all because Mr. Bernanke didn't really say anything, though he did say, and I think this is quite important, and I think this is what the markets have latched onto, that if the Fed were to withdraw stimulus too quickly, the economy would tank, which is quite striking rhetoric from a central bank president. But again, looks like our clients are the wrong side of it.
They are. I read a good analogy in the paper today, actually, which said it's a bit like a starter's gun. He's gone to the market, he's said, on your marks, get set, and he's gone straight back to on your marks again.
He's done a false start.
Well, exactly. We were waiting for the gun to go, it never came, and that's put retail investors, I think even more than the institutional investors, at an impasse. They're not quite sure what is going to happen, what his next announcement is going to be. It's caused a lot of confusion, and I think, to a greater extent, it's difficult to take any judgment from these sentiment figures as to what clients' viewpoint is.
Yeah, I think you're right. I mean, again here, looking at the euro-dollar, which is the primary one, we've had an awful lot of what I would say is negative news out of Europe. ZEW from Germany hasn't been particularly great. Political instability in Greece, talk of another 10 billion euro funding gap. Continued instability in Portugal. Mr. Rajoy, the Spanish Prime Minister, embroiled in or alleged, better be careful what I say here, alleged slush fund scandal, and yet euro-dollar has actually gone up on the week. You know, if we actually look at this chart here, we can see that you know, we've had a significant rally over the past week or so, back to sort of 130, 180, and yet our clients are short.
Well, I've got to say, as I say, the sentiment data seems to be pointing in all sorts of directions and different to a lot of what my clients are telling me on the phone. The key for me, and it has been this week, is the volatility. If you look at the US dollar index, we've gone from a 3-year high to a 4-month low back to a 3-year high. You try and explain to me how any retail investor is going to trade that, whether it's on a hourly basis, daily basis, weekly basis. It'll be very interesting. In a couple of weeks, we're hoping to add to our sentiment data a graph that shows how it changes, not just day by day, but perhaps even minute by minute. It'll be very interesting to see how it changes through the day, because I get the impression that this figure at the end of the day may be completely different to what we see just before and just after figures.
It's interesting you mentioned the dollar index. I did a video earlier this week where I pointed out a bearish engulfing week on the dollar index, which suggested that we could see a bit of dollar weakness, and that sort of really does tie in with that that euro-dollar chart that we showed just a minute ago. Just there, we had a bullish engulfing day last week. We are struggling to get through 132. The market's a little bit short, so maybe that does suggest that we could see further dollar weakness. Yet, if we look at the pound against the dollar, it's telling us our clients have a different view on it, given what Mr. Carney basically came out with earlier this week. If I can just, actually I'll just go back to the overview there. Our clients have a slightly different view of cable. As opposed to being short euro-dollar, they're actually long cable. And that's probably down to the fact that we had a bit of an about turn in the voting patterns on the MPC.
We have. It's quite funny. The whole Carney revolution, as it were. It appears that the football off season, they're usually the celebrities. Mr. Carney has taken their role perfectly. He's not just in the broadsheets. He's in the tabloids. You hear him at the bus stop. He's a proper little celebrity at the moment.
He's a rock star governor. I think that rock star central banker. I think I've heard some pundits describe him as. I wouldn't go that far, but hey.
You've got people saying he's like Hollywood A-lister George Clooney in his looks. When was the last time you had bankers and their looks coming before exactly what they were saying? I think again this comes back to the volatility I talked about earlier. There was so much talk about him, his arrival, and what he might or might not say. People are on tenterhooks, waiting for every single bit of information that may come out of his comments.
Yeah, I think we're going to have to wait until next month for that. But what I would say is, again, I'll refer you to my video earlier this week. I talked about that 150 level. So far that's held. Cable does appear to be ratcheting higher. I think this is one that our clients possibly are the right side of, which is good for us and it's good for them. But it also makes euro sterling quite interesting because obviously you've got a slightly different dynamics at play with respect to that and the ECB forward guidance and the Bank of England forward guidance. And actually this is quite an interesting one on the euro sterling because we're actually getting a slightly different viewpoint on the daily and weekly charts with respect to where this particular market is actually going. If we can see this chart here, we posted a bearish daily candle on this chart, but if we actually look at the sentiment indicators, our clients think it's going up, and that tells me there's potential for it to go down. So again, it's very, very difficult, as you said earlier, to glean a clear direction as to where the markets are going.
We get conflicting viewpoints from Carney and Bernanke and the ECB. Every bit of information that comes out is being taken one way or another. As we say, we're going to have to wait for next week, next month to get any further in-depth information. And until then, I see our sentiment data probably going from 65 long to 45 long and back and forth. A big decision either way is not coming. You mentioned earlier as well on S&P, it's the same there. We were in the situation the last time we spoke a month or two ago. Markets were rallying. What are the clients doing?
They were short.
They were short. Client sentiment short, picking the top as they have done numerous times before. And we just hope that this time, like last time,
well, the difference then was Mr. Bernanke opened his mouth on May the 22nd and sent markets lower. I don't think he's going to do the same thing this time. I think he's doing his best to support the markets, keep interest rates down on those long-term yields. As for gold, client sentiment here, everyone's talking gold lower because of the perception that the Fed may taper their asset purchases, but yet again, I'm not convinced about it one way or the other. But what I would say is, even though our clients are 75% long, we still can't get above 1,300.
I think that just shows retail versus institutional. Retail investors inherently like buying gold. They like buying commodities. For some of them, it may be a long-term play. It may not be the intraday traders that are creating the sentiment up at 75%. It may be the people that think, look, there's value there. Whether it's tomorrow or 2 years' time, we see value.
Or maybe they're just hedging.
They could be hedging against exposure elsewhere, of course.
Exactly. Okay, right. We've had a quick look at this week. Some of the key events to keep an eye out over the weekend. Obviously, the G20 meeting in Russia, where I think one of the topics on the agenda is likely to be the recent spike in yields across the world, which has caused an awful lot of money to come out of emerging markets. So we may get a statement at the weekend about that, which is why I think it's likely that the Fed will try, along with the Bank of England and the ECB, to try and keep rates low. Next week also we've got manufacturing flash PMIs from Europe and China. So those could be potential drivers as well. And certainly could well impact equity markets, especially if they continue to disappoint.
Well, exactly. Investors are looking for a reason to invest at the moment. With all the volatility, as we described, around the FX markets, around the indices, people may go back to equities. Equities has been popular over the last sort of 2 to 3 months. As you say, with yields where they are, to me it seems like decent value there, and I think a lot of clients seem to be choosing that as a well, you say safe haven. It's amazing that what is often looked at as a risk asset is looked at as a reasonably safe one at the moment.
I also think there's an element that clients naturally hedge the indexes to offset their long stock positions. So that could be another reason why we're seeing an awful lot of short positions in the S&P and the Dow. And yet when we look at the FTSE 100, the UK 100, clients are actually 55% long there. So there is a slight disparity, but maybe we'll leave that for another day.
Yes.
All right, okay, thanks very much, Nick. That's it from us here at CMC for this week. Until next week, this is Michael Hewson and Nick Dowlais talking to you from CMC Markets.